Welcome back, you guys, to Andy the Banker Show. And this week we had a lot of volatility in the market. My portfolio alone has gone down 3.38% this week, and we lost about $2,200 in this portfolio in value. Now, you might be wondering, Andy, what's going on? What caused your stock market and essentially almost everybody in the market to calm down? It is mainly because of the rates that were announced in Jerome Powell's Fed meeting. We did get the 25 basis points rate cut for the Federal Reserve, so that was expected. But what we did not expect, or at least I guess the market did not expect, was that the rate cuts for next year were not so certain. It could go down. They have two planned to be going down for 2025, but if the data does not support it, they could get rid of the two rate cuts or even increase on that. And essentially, because of that, we had a lot of volatility in the market. A lot of the stocks, essentially 90% of the stocks on that day of Fed meeting, dropped tremendously. Specifically, a lot of the small cap stocks. Now, you might be wondering, Andy, in cases like this, when you're losing money, you already have a lot of gains. What are you going to be doing, right? In cases like this, you guys, when I'm investing and my stocks come down, instead of panic selling, I'm actually excited. I'm actually excited to buy more and more and more. The main reason is because I'm not investing for the next year or next 5 years. I'm investing for the next 10, 20, 30, even 40 years, you guys, because that's how long I have of investing left. I consider myself a long-term investor, and as long as I'm buying into these companies who are cash flowing, who are building compounding machines, building over their business to be more efficient over time, I believe I can do well in the long term. I'm not trying to get rich anytime soon here. I'm okay waiting, being patient, and getting rich slowly over time. As a result, I actually did buy a little bit more into the stock market. Now, one of the issues I had was not which stock should I sell, it's that which stock should I buy, because there were so many great stocks on sale that day. And actually, because the day was almost ending on that Wednesday when we had a huge drop in the market, I actually just ended up buying the S&P 500 because at that moment there was just so many companies. I had one of those moments where I just couldn't make a decision. I said, you know what, I'm gonna pick the S&P 500. And as in case you guys didn't know, in the long term, the S&P 500 is gonna be my portfolio. All right. Right now, I invest in just four stocks: Chipotle, Costco, Google, and Apple. But I'm sorry, and Microsoft. And but uh, as time goes on, I am gonna be transferring my portfolio from these four stocks to the S&P 500 to make it a little bit easy. For the time being, I do enjoy investing in these four stocks. They are a ton of fun for me, and I will continue to do so. Now, one of the things that I found interesting was that when the rate cuts were announced, right, the 10-year treasury actually went up in price. Now, in case you guys don't know what the 10-year treasury, this is the one where it's correlated, very correlated with the mortgage rates. And this is kind of what determines our mortgage rates, the 10-year treasury. With it going up and higher in price, people are expecting in the future that the 10-year treasury to be higher in interest rates. That was very interesting for me with the Fed lowering the rates, but the 10-year going the opposite way. Now, this is in a way a little bit good in my eyes because now instead of having an inverse relationship with our rates, we're kind of having a normalized rate stream where the longer you invest your money, the higher interest yield you should get, and that should be totally normal. Right. With this being said, though, a lot of first-time home buyers, a lot of people who end up having mortgages, these will make your mortgages a little bit more expensive because the rates on the 10-year going up. Now, another thing that I realized on the sharp drop in the stock market was that with these small cap stocks, the past couple of weeks I kind of thought about getting into these small cap stocks, but then I realized why I didn't, and it's because they're extremely volatile, right? There are moments where some of these companies can drop by 10%, 5% in a single day. And that type of volatility is something I'm just not a big fan of. You look at a company like Hims and Hers, right? This was a company I actually thought about buying into. But you look at like a single day, 10% drop. The type of volatility, it's what makes me invest in the large cap tech stocks, because they don't have that type of volatility where it's possible Microsoft, Apple can go down 10% in a single day. It's just that it's rare for me to see those type of days. It could happen. It's just I haven't seen those in a while or ever. That's one of the reasons why I love investing in these big large cap stocks. Even Costco itself, not so volatile in my eyes. And in cases like this, you guys, when the market is going down, you might be wondering, Andy, are you scared? Are you panic selling? And the answer is absolutely not. I am trying to buy more and more into the stock market because I'm investing in for the long term. I'm not just investing for the next 1 year, 5 years. And that's the beauty of having time on your side. When you're an investor who has time on your side, you can let your investments grow. You don't need the money right away. You are able to take a lot more of these risks, because if I buy into these amazing compounding companies and they drop in price 20%, 30%, it's fine because I have decades for the stock to go up back in price. Now, my next moves in the stock market. I buy into the stock market every 2 weeks, and I plan on doing the same exact thing for the years to come. Now, if I'm gonna buy more into the stock market, the stock market keeps on dropping. That's fine. I'll be happy. I'll keep on buying more. If the stock price goes up, that's fine. I get appreciation on my assets. It's in a way, it's like either direction the stock market moves, I'm pretty darn happy with either way, you guys. Now, one of the investments I truly, truly enjoy, you guys, is this company called Chipotle. And I've been buying a lot of Chipotle recently. And one of the things that I've been constantly told is how Kava was going to destroy my Chipotle. All right. I did go into New York City recently. And when I went to New York, I tried myself a Kava, all right, a Kava bowl. And I realized after eating Kava, I became a lot more bullish on Chipotle. And here's why. I thought kava was extremely delicious. It was great. I thought they were going after different clientele, because with kava, you're going after a more established clientele. You're charging $14 per each bowl, and that's the cheapest one. I saw certain bowls could go up to like $17, $18. Whereas with Chipotle, you can get a burrito for like $10, right? So you're going after different clientele. With kava, I think you're going more towards the sweet greens. If kava goes against sweet greens, I think that's a better example or better competition than Chipotle. They have a similar business model, but they're not, at least in my thoughts, they're not going after the same clientele. So with that being said, I've grown a lot more bullish on Chipotle, and now I'm planning on adding more to this portfolio. Now, something that was very surprising to me this week was how the stock market on Wednesday dropped significantly, because they didn't price in that next year there would be less rate cuts. With Trump winning and the tariffs being announced and potentially tariffs being increased, I'm sorry, inflation being increased through immigration, less immigration, I thought that it was very normal that we priced in the fact that we may not even get a rate cut next year. But that was one of the things that really surprised me. Now, another thing that surprised me was that I know the stock prices went down on those news, but I think about 2023 and how even though we were raising the rate cuts, interest rates during that time, the stock market still rallied during that whole time. Companies were still, especially the big cap stocks, they were still able to find profits during that time. And it's another reason why I'm so bullish in 2025. Now, even with rates, if rates do go up, I'm very confident in the companies that I invest in, that they are able to do well over those times. And if the companies, if they keep on dropping lower in price, I'm happy to buy them more. If they increase in price, and that's fine as well, right? Yeah, I'm happy either way. All right. With that being said, you guys, thank you so much for watching Andy the Banker Show, and I'll see you next time. Thank you.